Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors, May 26th, just after the close. Semiconductors, right? Semis. That was the whole show this week. We look at the S&P up, well, let's call it 0.5% up back towards that 4,200 area. We've spoken for months now about that 3,900 to 4,200. I will mention that this move to 4,200, and I mentioned it last week, has come off some higher bottoms. That can often portend a move higher. Now, I know fundamentally it might be difficult to come to grips with that. We look at the market both fundamentally and technically. Fundamentally, market appears to be expensive. Market appears to have a real fight on its hands against cash, with treasuries at 5%. So there are some prevailing reasons to want to remain defensive. We'll see how the S&P reacts. NASDAQ's another story. It's a very solid breakout this week, up, let's say, almost 3%, really on the back of semiconductors, although software got a big kick too. Take a look at the moves in Microsoft and Adobe. If we look at the Qs, and more importantly, because that's a story everybody's focused on, the fact that you have narrow strength, it's strength nonetheless. I don't buy the fact that narrow strength means a market is going to roll over. If we do look at RYT, which is the equal weighted technology index, we see strength as well. So in equal weighting, you don't have 4 or 5 or 6 companies dominating the index. Each company has an equal piece. So when we see strength there, it's a positive. I still think you want to act accordingly in terms of what your psychology is and what your objective is with the markets. But I do think we've gotten to a point that pullbacks can be bought. Remember, last year, moves higher had to be sold, right? Rips had to be sold because they weren't holding. They were falling to new lows. A little bit different action this year in terms of where we sit. This week, off of the big move in semis yesterday, we did sell them. Can buy them back. But in US ETF, we did some selling of semiconductors, did some buying in RSP, which is the equal weighted S&P in the US ETF portfolio strategy. In terms of what we'll be doing next week, an awful lot depends on how the market acts around this 4,200 area. But again, even though we're reading about debt ceiling situations and we're dealing with higher interest rates and sticky inflation, there is a bid on the growth side of the market. So let's keep an eye on that. Now we're going to toss it over to John, who's taping remotely this week.
Hi, I'm John Mousseau. I'm the CEO of Cumberland Advisors. It is Friday around lunchtime on May 26th. This week in bonds, really dominated by the headlines of the debt ceiling discussions. We had short-term yields up significantly. When you look at something like a 2-year Treasury bond went from a 425 to a 455, up 30. And it kind of less and less as you go out the yield curve. The 30-year bond barely budged. It was up 4 basis points this week. So, the driving parts here are not discussions about inflation, et cetera. The driving parts are they going to get a deal done? Is this going to get done before the deadline? When is the deadline? There's open discussions whether you run out of money from June 1st to June 8th. It does open up a whole lot of questions, though. If we do default and people do not get paid, what is the priority of the payments that do get paid? Because there is about $70 billion that the Treasury has on deposit, and they can borrow probably up to another $90 billion from the pension fund of the government. We don't know what those priorities are. Is it bondholders? Is it Social Security people? It throws a wrench into the other markets, think about the housing market with Fannie Mae and Freddie Mac. That would cause absolute turmoil. And even in the municipal bond market, you would have probably this kind of environment where no municipality would want to come to market while this is going on. So the amount of municipal deals could drop precipitously. There might not be any munis around to sell because people were just going to, button up and not do anything while this is happening. Shame on Congress. This has been going on for a long time. The debt ceiling was established in 1917. Takes majority votes of both houses of Congress to up it. And, no one likes to see people playing chicken. So this is what's been going on. We do think that once you get beyond this, the bond markets are probably in for a fairly good summer, particularly munis, because you're going into this time period of June 1st and July 1st, which are the two biggest payment periods between coupon payments, maturing bonds, some called bonds. And if you look at how much is rolling over versus how much is actually in the pipeline for new issues, that difference is negative 20 billion or so, which means there's a lot of overhang of basically more money chasing less deals. So we think a lot of that money does get reinvested into the market. You always get some leakage into stocks, but with yields where they are and the ability to buy 4% plus yields in the longer end, and in some cases up to 4 3/4, we think that's very cheap, and we think that starts to come down as the summer moves on. Got to remember too, the muni market has been hurt in the last couple of months, or really the last month, by the volatility of the treasury market. That has hurt municipal dealers. They cannot hedge, so that basically means that their bids are weak and they're giving away new deals, which reprice the market. And the other overhang are the portfolios of Silicon Valley Bank and Signature Bank, which are being disposed of over time by BlackRock. And that's kind of like having an 800-pound gorilla in the room with you. And, so people are a little wary about that. Although I will tell you what bonds they have sold have gotten pretty good bids, probably from insurance companies. Matt and I gave you a gift last week with National Treasure winning the Preakness Stakes. We'll be back in a couple of weeks with our picks for the Belmont. And we do wish everybody has a great Memorial Day weekend. We honor all those men and women who have given the ultimate sacrifice for our country. So please enjoy the weekend.
Thanks, John. And on the Memorial Day note, I've included a couple of links below to two Marines that I encourage you to take 5 or 10, 15 minutes to read about them. The links are from Arlington Cemetery. The reason I chose Doug Zembiak and Travis Mannion is fairly straightforward. They wrestled for the Naval Academy. In college, those trips down to Annapolis and the trips up to West Point to wrestle Army were always going to be rugged, tough battles. I have an awful lot of respect for the athletes in the military academies. Doug Zembiak was an All-American at Navy, and Travis, who actually in 2003 or 4 in the finals of the Penn State Open tournament defeated one of our top wrestlers. These two gentlemen were both younger than me. But in terms of spending a few minutes just reading about what Memorial Day should mean to all of us, I think it's important. So I encourage you to read those links and enjoy the weekend.